Alright, guys. I think I'm live. Let me. Okay. Give me a minute. I am. Try to set this up real quick. So, alright, so I was tinkering on the. Anyway, sorry. Hold on, let me do this real quick so that I know if I'm live or not. Yes, I am. That's good. Alright, let me. Okay, that's good. Alright, so I am live. I'm just gonna be live for about half an hour. I was gonna do a video, but I'm like, I'm too lazy to edit anything. So, see, stuff like that's gonna happen. My dog is going wild and stuff like that. So, gonna be a waste of time. But anyway, hey, just part of being, at home with the dog and everything. Alright, so I'm gonna wait a little bit and let me set this up too so that we could discuss this one as well. Now, I've been following the bond market for a little while. Sorry about the dog. It's okay. Okay, one second. Let me set this up. I'll be right back, okay? Alright, guys, welcome. So, my dog is done barking. He might be barking again, but we'll see. Alright, so let's get to this video. It's gonna be a short one. It's just something I noticed here. So, this one that you're seeing right in front of you is called HYG, and that is a high yield corporate bond. So this is an account for like, I guess you could say like those high risk, high reward, high yield type of thing. So apparently this one will pay you 8% a year or more. Again, depends on the value of the bonds as well. Is it going to be worth it, right? So if you look at the, hold on one second. Anyway, sorry, my dog. So if you look at this one right here, again, this is a high yield corporate bond, right? And usually, when it's trading down like this, they always say like the bond holders or the bond trader are smarter than the equity trader. That's usually how the saying goes, right? So when you trade bonds, like a high yield bond, and it's trading down like this, it's a sign of trouble, right? And you could go back to to history and look into that. And if you look at here, this is where the housing market is looming, right? So of course, not people were like, oh, nothing's wrong here. Look at the bond trading so high, right? And then, oh, it's gonna bounce back up, but it never did. So what happened? Boom! Every corporation out there were, I guess the AIG, the insurance crash, housing market crash, everything was crashing down, right? And this is probably causing a whole bunch of fear in the market as well. Now, if you kind of overlay this with the S&P 500, I wonder at what point does it dip as well? So the orange line just is the S&P 500, right? So if you look like the same way, right? The bond, just like, what's going on here? Hold on. Alright, I don't know what's going on here. One second here. What's the matter here? Okay, one second. Stop recording. Let me try to fix this real quick. I don't know. Okay, so it looks like I'm live right now. Okay, sorry. It went down, disconnected for a minute, so I don't know what happened there. Anyway, so I'm back right here. So, okay, so if you look at the past, right, it doesn't deviate from it that much. If you look at that, So the bond usually, again, but then when you go a lot recently right here, you see that it's just becoming so much more deviated, right? So the idea is that this eventually gonna snap right back to where it should be right here. So again, when is that gonna happen? You see this drop right here? This should be a lot more steep than that, right? So not quite sure how this could trade down like this, but the bond just keep going. I mean, the equity just keep going and going, right? So in my opinion, it's being propped up by some sort of government, intervention or some sort of rigged establishment there, right? Again, you could always look into the past and see what's going on here. So again, this is like the corona one, right? But is this a good indicator? I don't know. I think this is a good sign that the economy is going down from here. Now, this is the lowest it has ever been coming down to, so it could, kind of mimic what happened in 2008, back in the crash of 2008, or it could be more severe because, people are too complacent. People are thinking that, oh yeah, you could just print your way out of debt. You can't, because again, eventually people who invest in the company gonna be like, well, how much are you gonna be able to make for me, right? So investors are looking into a safer, a safer, lower risk type of thing. But eventually, even the lower risk type, like government bond, for example, is not even lower risk. It become higher risk by the minute, because again, they keep printing. So how are you gonna kind of justify the national debt being $33 trillion, right? If you look at the debt clock here, how do I spell debt? Debt clock right here. So I'm looking for the real time. Yeah, my internet is not going well right now. Hey Lionel, what's up? I need a day. Well, not quite yet, not quite, but I'll be right there. I'm showing you the national debt clock right now. I don't know why the internet is so slow. Maybe they don't want me to show you this one. What's going on here? Why is this thing? But anyway, look at this. I don't know why this thing is here. They're trying to hide something. But anyway, you don't need to see this part right here in the middle. But if you look at the left-hand corner up here, see that? Boom. $33 trillion, and it's counting. And this keep going up and up and up. Okay, look at this. See, $1 million. Just the time that I point this out, it's gonna be 2 million in a minute. So this thing's gonna keep going up and up because again, they don't tax the correct people enough, and eventually, that's why wages hasn't kept up with inflation. So how can you pay off those debt when you earn less and less? It's just I guess like death by 1,000 cut type thing. So you're gonna bleed out slowly. So, yep. So that's a dilemma, obviously. When is it gonna come crashing down? I don't know. I mean, people say like October is the worst month, right? So we still have 2 more weeks to go. So tomorrow might be hell in the market. Who knows? But it could be just as green as any other. It's like anytime there's a war, right? Remember last weekend there was the bombing of Hamas, right? Attack on Israel, allegedly. And what happened? Come Monday, the market was green. What the hell, right? But the bond market, look at this. The bond market just keep dumping, right? So when the bond market keep dumping, that means the yield is going to be higher, right? Now, again, GME had $300 million in the bond market. So that $300 million, assuming that he bought, this is a 20 years bond, okay? 10 years bond going to react differently, a little bit different. But the whole idea is that when the yield goes up, the bond value, this is what you're seeing here, goes down. Okay, so that $300 million might be going down to 290 whatever, right? So it depends on how many percentage gonna eat up and which one did Ryan Cohen buy into. Is it 10-year treasury bond or 20-year treasury bond? I wish he told us that. But regardless though, no matter what happened to the value of the bond, the yield is going to be paid out to GameStop no matter what. So GameStop could use that yield to operate the day-to-day, or they could use that yield to put more into bond, right, to create more yield even. So that's the compound effect, until we get out of this economic downturn. With the debt the way that it is, you cannot, again, like, how are you gonna be able to pay back those debt except for default? Right? Go on default, meaning somebody gonna have to lose that money. So, yep. Yeah. But anyway, so let's get to this video, the real reason why we want to be here in the first place, right? It's for Jimmy. So I was kind of dabbling onto, like, just the financial, right? Just seeing different sites, what they're reporting and whatnot. So this is a trading view, as you see. And what I've noticed is that they have a better, kind of stats, right? So this is an overall. Obviously, we know what GameStop is. They sell a whole bunch of electronic stuff, right? You could read that on your own. But so the ownership, if you look at this free float shares, is 266 million shares right here. Let me blow it up a little bit more. Is this too big? Sorry. There you go. So you see here, 266 million shares, and 80% of free float is that amount. And look at the closely held, meaning the insider. Now, of course, they've been reported that Ryan Cohen actually owned 13%, so I don't know why it still stay at 12%. So not quite sure what happened there, but this also included the board of director and all that stuff too, right? Because they're vested, or maybe only 12.85% of the company is being held closely, and the rest could be sold into the free float. Who knows? But Ryan Cohen kind of owned the majority of that. Valuation, obviously this is a at the current price that we're seeing right now, it's the market cap is $4.55 billion market cap. Net income is a sliver of that. Of course, it's a loss right now. If you look at the yearly trailing 12, it's close to $100 million lost. So market cap is right there in the black, and then revenue is 5.8. So they have more revenue than the actual market cap of the company. Revenue is everything, including, expenses and all that stuff. It's everything that they make, not accounting for, the expenses. Sorry. Revenue is everything. Expenses and sales and all that stuff, right? So with the valuation of the company, if you look at the price to sell, like from 0.1, 0.005, now it's 4, and then down to 1.1, now it's 1.1. I think there's actually, hold on, maybe this one is a lot better. Hold on 1 second. I feel like I don't make any sense right here. Hold on, let me look at this real quick. Price to sell. So this one gives you a lower price to sell. Now remember when I said this one evaluation, price to sell, we want it to be lower than 1, right? Lower than 1 is better. But for this particular website, TradingView, they give them a higher price to sell. So I'm not sure what kind of data comes out of this. Like which one, at what point do they take the price to sell here. Price to earning, it's kind of higher right here, to close to maybe 25 or so, or 22 price to earning. So again, I don't know how they calculate this per se, so I have to do more research on that. But this is a trading view, obviously, so that's why I wanted to see how did they report GME earnings here. So if you look at the performance here, growth and profitability, obviously it's creeping up and up, right? So this one, profit margin is down. This is before Ryan Cohen got involved, 2018, and then 2019. This is when people kind of start talking about it. Rowan Kitty was talking about it. DFV. If you don't know who that person is, go watch the movie Dumb Money, you'll see. But anyway, so this is when, he started to cover, GameStop. And then this is when Ryan Cohen got in. But even then, they kind of like, the revenue went down from there, from 8.2 billion to 6.5, close to 6.5 billion revenue right there. Net income down. I think this is where the what is it, goodwill kick in, right? Impairment. I think that's why they showed that loss of 400 and then 700, right? So this is when the goodwill kicked in. And then when Ryan Cohen got in, that's like the rest of it, right? The goodwill was still kicking in, but the damage has already been done, right? So from 8 billion in sale down to 6, and then down to 5 now, right? When Ryan Cohen got in, it increased a little bit, right? I mean, technically it still stayed flat, but it's not the end of the world flat type thing. So if you look at the net income in the middle right there, when Ryan Cohen got in, it was down 215 billion, right? Profit margin still down 4%. And then 1 year in, I feel like this year would be a testament of what Ryan Cohen did, right? Because he got in at the end of this year. Remember November of 2020, okay? And then, so he got some influence here. Revenue went up. Net income kind of increased a little bit in terms of loss. 381. Now, this is not completely Ryan Cohen, obviously. It's all of the board of director and Matthew Furlong, right, when he was the CEO. So, even though Ryan Cohen was the chairman, he didn't, he wasn't the CEO, but he was still in charge of the ship, right, where GameStop should be. So profit margin went up in terms of loss as well, but revenue went up a little bit by, I would say, $1 billion. Yeah. And so revenue next year, this is 2020, 22, kind of stay flat, right? 5.93 versus 6 billion. That's not by much, but then if you look at the income loss, it's $300 million lost there. So if you look at the trailing 12 right now, keep in mind we still have 2 more quarters to go, right? So this number right here is sorry, this number right here, net loss income, is trailing 12, right? And so can they make $100 million in 2 quarters? I think they can. So that either is going to be wiped, clean slate, or very, very tiny loss, just like last quarter, right? Now, we know that fourth quarter is the best quarter for GameStop, so of course it's going to be highly anticipated. I have complete faith in Ryan Cohen in pulling it off, but he might pose a loss too, in order to disguise it as remember, let me show you what I mean. So this is a trailing 12, right? And this is the recent quarter being posted, right? If you didn't do the trailing 12 and go to the quarterly, you could see that the net income is down to two loss of $2 million, right? And I think the reason why he did that is because he wants to kind of disguise the gain in order to take advantage of the taxes, right? If you don't make money, of course, you don't have to pay taxes. So you could hide your profit that way. But if you look at the profit margin, it went up that quarter, right, for a quarterly report. So the direction is going to the right one. And also, too, if you look at the balance sheets right here, you could see how much did he put away in terms of long-term assets, current asset. Hold on. I think it's this one. Right? Wonder what the current asset is. So current asset include all current asset that do not fit into any of the above category. Receivable, long-term asset. So hold on, I'm learning as I go here. Sorry. Man, I'm looking for that security thing, marketable security. It could be this one. I mean, current asset could be anything. But if you look at trailing 12, I'm looking for that right here. Upstairs, sorry. So short-term investment, quarterly. So you could see that from here to here, from last quarter to this recent quarter number 2, he has increased it by $40 million, $43 million, right? So technically, he didn't have to increase that, right? He could have posted as a gain, like a positive, but he didn't want to. Why would he? Right? Because you could hide it. You could hide it so that you don't have to pay more taxes, right, on those gains. But anyway, so that's the whole point there. So again, I mean, he could decide this quarter, this coming quarter, the third quarter, he could report a loss again, in order to beef up inventory for fourth quarter and then paying less tax. Reserve it until the end, right, of the year. So, and perhaps too, he probably want more cash on hand. I bet you anything he's going to increase that marketable security right here. Right here. He's going to increase it to, another $50 million incrementally, Again, like he's been increasing like crazy since it's been 4 consecutive quarter already that he did that. So I bet you anything he's going to continue to do that. Again, it's like if the rate is high enough, 5%, 6%, why not? and you just park it there until you're ready to decide to buy a company that makes sense, right? To expand more. Currently, it does not make sense to expand right now. Okay, so what was I saying? I lost track, you guys. I lost track of time. Hello, everybody. But anyway, so this is 2002. So from $300 million lost in 2002 to now, 2 quarters in, we're losing $100 million. So that's $200 million difference in the plus side, right? Just so you know, and more to come, right? So we're hoping that it's going to be able to break even in the 3rd quarter. So even if he only make half of that, meaning 50 million, and then the next quarter in, it's going to be another 50 million, that's still good. Again, this is a fiscal year, okay? So I think he's going to be able to pull it off. All right, so this is a profit conversion. Not quite sure what that means. I think COGS, not quite sure what that means. I think that's cost of goods and services, maybe. That makes sense to me. So of all of the profit, revenue minus this, you get the gross profit. So the gross profit is around $1.3 billion. Operating expenses, see, this is why, and this is the period of 2002. So it's just showing you the diagram of where that money goes, right? And so the operating income went down $300 billion, and then non-operating income expenses. So is that up or down? It's hard to see. So expenses, even further. So that's how you come up with the net income. So if you add this together, you get net income. So this is the money that we care for, right? At the end, we want this to be positive. So we're working on that right now. Okay, so if you look at the sources of business, right? Currently, we only have 3 categories of money-making thing, and that is collectible, software, and hardware, right? And if you look at the hardware right now, we have increasing in percentage in hardware immensely. So most of our money comes from hardware accessory, right? And if you look at the GameStop website recently, you would see that they have expanding their category on that hardware, right? Pretty much, you could buy anything. I've shown this website to you before, where they have hardwares. These are all hardwares right here, keyboards, and we have our own brand name as well. So that's gonna take off. I don't know. We'll see. I mean, if they have good product, why not? But they also sell other stuff, cool keyboard. Look at this keyboard. Like, who wouldn't want to own that? I mean, $60. Come on. Just saying. So yeah, people will buy into this, and more people, more and more customers are going to shop here first instead of Amazon, right? Well, why would they pick Amazon versus GameStop? Well, GameStop has more perks, right? Eventually, they're going to learn about the pro game, right? Like the membership and all that stuff. And very excited about this accessory here. They have chairs and all that stuff. Glasses, like, really, So they have a whole bunch of stuff to shop at. I'm sure they're gonna add more as time goes on. So I'm not worried about that. As far as software, now this is where people, especially mainstream media, is telling you that GameStop is still stuck on. That's most of their revenue. But if you look at it, it's only 30%. Yes, 30% is still high in revenue when it comes to software. As you know, like people are telling you, oh, it's going digital. Well, I mean, it's not yet completely, but it's the trend is there, and this is where NFT comes in to subsidize that, right? That part, right? Now, again, people need to think about the NFT marketplace to be one of the growth. This is where I invest in GameStop, right? This is the whole reason why I invest in GameStop, is the future growth on that platform, which is NFT marketplace. I don't think anybody has any idea, including me, how big it's going to be. But the fact that GME is on that platform, is building that platform on the back, or have that platform built already on the back burner, when the regulator is ready for crypto in general, which they are going to be, because that's the opportunity to usher into a new, different industry, right? It's a new, completely new industry, and people are going to go nuts on it, right? But again, the regulator has to come together first, and of course they're going to carve a big pie to themselves and then leave the crumbs. And even the crumbs for us as GameStop shareholder is going to be immensely, because eventually they're gonna product fit NFT product, you name it. You know, I have a myriad of idea of what NFT could be, right? It's not just JPEG, it's not just, you know, in-game item, you know, it's not just that. It could be anything. You know, I've made video on it before, months ago, so if you want to scroll down to take a look at that. But man, it's the potential is endless on that platform. But on top of that, you have this business that is working, right? Does it create massive amount of money? Well, I mean, it's relative, right? If $100 million per quarter is not enough for you, then okay, invest in some other company. But again, like, you know, you have Ryan Cohen right now as a CEO, and I think he could pull out more than that, right? So I wonder if I could go back to like even further than this, right? So if you look at here, let me look at the trailing 12, and if you look at the previous year, you know, when was there actually profitable? Hold on, let me... Sorry, you guys. I'm kind of all over the place right here. When are they profitable? So this is 2019, 18. You're losing money. Asset. Well, let's go to income right here. So we want to see net income down here, this line. I wish I could highlight it. Okay, so really up top there. I'm trying to see if I could show you guys where... Wait, this is a trailing 12, right? Yes. So right at the tippy top there. So when did they... I'm looking for a positive number. $3 million right here. 3 million, that was 2018. Positive 3 million. Now that could be because of the the goodwill impairment chart, right? So that was kind of the anomaly right there. Share price went down so low that it hits the goodwill value. And at the time, they had around $2 billion of goodwill. So that's why. But if you look at, see right here, this is the profit before all of that goodwill went to effect, right? And I'm sure this is the decline that they keep telling you that, oh, this is the decline, this is the decline. But, it's terrible, right? So this is where the goodwill effect, I bet you anything. That's why they lost $1 billion. For what? For the goodwill impairment, right? And this is where, I'm sure, because they were expanding too large and they couldn't make the money. Again, this is an old leadership, okay? This is before Ryan Cohen got in. So the reason why I went back is because I want to see how much to expect them to make. And if you look at this right here, close to $400 million a year. That's net income, okay? That's what we want to go back to. Can he do it? I think he can. I think Ryan Cohen can. And at a lower number of store, right? Remember, we closed out a whole bunch of store. So, but now you have e-commerce, right? You have a whole bunch more items to sell. And it's a lot easier to use this website than it was before. So I heard, right? I don't know. You guys have to confirm. Like, if you've shopped at GameStop before, let me know on the comment there. But, so yeah, see, this is the profit that you should be expecting. That was a $350 million net income. So if that's not enough for you, like as a company, it's like, that's too little, then okay, go invest in Apple, go invest in NVIDIA when it's already trillions of dollars already. You see what I mean? And this is the most valuable thing, and this is where the price discrepancy comes, is that people don't realize how valuable this company is until it's too late for them already. So that's why we're early into this game, right? In this investment thesis that we have in GameStop being a better company than any other ones, right? It doesn't have to be the manipulation thing, right? And this is the difference between trading the stock versus investing in the stock. We are the investor. We believe in this company in the long term. Therefore, we invest in it in order to capture that massive growth that people who just trade in and out could not capture, right? If you're the best trader in the world and could capture at a high and then sell at buy at a low and then sell at a high every single time, then you'll be the richest man in the world. But nobody could time that, right? Nobody knows except the insider who have the trading book in front of them, right? Of course, you have that people too, right? Call a conflict, of interest. We all know about Citadel having a security and trading desks versus having another company that is a market maker. So we know that conflicts of interest exist in this world. So those are the only people that make money, but then they are cheating, right? Because again, if you have the trading book right in front of you, you know which price to price your, which price or how many orders going into GameStop, and then you could stop the buying order or buy ahead of time in order to capture that 1 penny spread. And if you do that a gazillions of time, obviously you're gonna make billions of dollars doing it. And they just got fined. The SEC just fined them $7 million for 5 years worth of missed marking order. So what is that? What the hell is that? You see what I mean? It makes no damn sense. Anyway. Alright, so I'm oh my god. I'm going way too long. I thought I was gonna be here only 30 minutes. So yes. So we only have 3 categories right now. That's good. And this is by country. Obviously, we're mainly in the US. European is a sliver of that, 15%. And then you have Australia, 9% there, and then Canada is the least one, right? Now, maybe this is due to tax incentive type thing. Canada is probably higher corporate tax. Well, I don't know. Perhaps there are a lot of American gamer than European versus Australia. Who knows? That could change as well. So this one is an estimate. So when they missed earning, you say a surprise. So they missed by like 1%, less than 1%. This is what it means. That's why it's in the red. And then the street was estimating that back in 2020, they missed the earning by 1.6%. I bet you anything that stock went down like 10% that day. They missed 1% of sell, and then stock went down 10%. And when this one right here, the earning, they missed by 1.5 to the upside. I mean, beat earning. That's why it's green. And then they beat earning here as well by 0.78. Now, this one is to be determined. Obviously, they have estimated already that by the end of this year, which is March 24th, 28th of March, that's the estimate earnings date for next year, 2024. They estimate that it would be down. So from 5.8 billion to 5.7 billion dollars in sale, right? I bet you anything we could beat that. Yeah, we could beat that. What do you think, you guys? What do you think? Can we beat them? But anyway, so this is revenue and this is earnings. So in each one, even though we didn't beat earnings, we beat, look at this, we beat the street back in the 2019, we beat the earnings by 500%. This is nuts, right? So you went up 7 cents per share. And then 2020, we surprised them by 1% right there. And then this one, we went down 72 cents. This is when Ryan Cohen got in at the end. This is where Ryan Cohen spent a whole bunch of money to restructure the company, right? NFT marketplace and a whole bunch of stuff. And then we went ahead by 29 cents. So we beat the street by 29 cents here. So the estimate is losing 2 cents. So they have increased their, expectation of this company. So that's a good thing, again, first they laugh at you, right? They give you a terrible, estimation or whatnot. Perhaps this is an overestimation, right? To try to beat down the stock even further. And they do this oftentimes, these analysts can overestimate something in order to make it impossible for the industry to hit that, right? Or the company to hit that mark, or they could underestimate something in order to prop up the stock price, like Apple, for example, right? And so they could do that trick too, in order to manipulate the price up and down at will. So I would take the estimation with a grain of salt, and we'll see. Okay. Of course, dividends, we haven't been paying out dividends. We don't have to, because they need the money. Let them allocate the money in a better way. I think Ryan Cohen is a better money manager than the rest of us. So I trust him. But eventually, it'd be nice to have some dividends coming back, just for supporting the company. And I'm sure, it's being thought of, but I think the company has to be a lot more, has to be stronger, making consistent, positive income, net income, and I bet you anything, once we kind of have a stable income, net income positive every single year, we are going to go back to dividend. I don't care if it's like, NFT dividend or like just regular dividend. Cash dividend is also good too, because again, you could reinvest that dividend and cash back into the company if you want to. So this is the amount of debt level that we have. Obviously, we have been paying it down. Now, this debt is not a long-term debt, right? Because we all know that long-term debt when we already pay them down. So this debt is like less than a year. It's not an interest-bearing debt or anything like that. So I think they just account for every type of debt out there. So if you look at the cash flow for 2018, up closer to $130 million right there. Cash equivalent, $1.6 billion. 2019 right here, we went down substantially more. Cash flow negative. That could be because of the goodwill thing, right? Kicked in. Went positive again, $63 million in the middle there. Debt went down from here, right? But not by much. And then this is when Ryan Cohen got involved, remember? And then this is when he became a chairman. So cash flow went down, of course. Yes, they have to spend money, with the NFT marketplace and all that stuff, right? It costs some money. But look at the cash on hand. We still have more cash on hand there. Coming from 600 million there up to $1.3 billion right there. And then debt went down. So, and then we've been consistent in that, but look at the middle part, right? We went from cash flow negative down to close to a $500 million the year of 21 to up about, so it's a $500 million swing right there if you look at it, right? In the middle there, see? So again, like, what are people complaining about? We're cash flow positive since last year, and people don't give us any credit for that. So I think the guy in Ryan Suzy, right, the Ryan Suzy guy, is the one that's like, oh, that doesn't matter if they're burning cash. If like your net income is still negative, it doesn't matter if it's a cash flow positive. It's like, yeah, you idiot. It's like, if you are cash flow positive, that means day to day you're not burning money. Yes, net income, you could do a whole bunch of stuff with that. We're still working on that, but the point is you're cash flow positive. It's like, that is a monument achievement, if you ask me, you know. But I digress. Okay, so we have asset. We have more asset than liability in short term. Long term, we have more asset than liability. So again, we're not going to file for bankruptcy anytime soon. Okay. All right. So that's that. So let me look at the statement right here. Now this is an in-depth analysis of what is what. So this is income statement, obviously. So if you look at the growth, so revenue, this is 2001, 2002, quarter one, right? So this is quarter four. So of 2001, quarter four of 2002, right here. So if you look at from year to year, I think that's what it, oh, this is annual. Sorry, let's go annual. You could go quarter too. So annually, obviously, we went from $8 billion down to trailing 12 months, $5.8 billion. Now, that could be fixed, right? Yes, revenue kind of flat ever since Ryan Cohen got in, which is 2020, right here, 2020. Right here, and then 1 year later, he increased the revenue by $1 billion right there, and then $1 billion right here. So they estimated it to be lower than that. But again, next quarter, we'll see. We'll see. Cost of good obviously went from 5 billion, 6 billion, 6 billion to 4 billion to 3 billion, now 4.7 billion, right? So it went down close to, I would say, $100 million increment, and it's being estimated. This is a trailing 12 month of the quarter so far, 2 quarters so far. Down even more, $200 million swing right here. So, yeah, it's like, take that. Okay, so I mean, like, gross profit right here, obviously we are working on that. Trailing 12 month, it went up right here. So if you look at right here, from 1.31 to 1.38 right here. So that's around 70 million right there. Increase from last year. Okay, and then of course operating expenses went down. If you look at it, around $100 million swings right there. Operating income, we want it to be plus, so we're still working on that one. Pre-tax, tax went down, obviously, right? This is the one that we have to pay tax here. Oh, this is sorry, my dog. Just give me a minute. I'll be right back. Sorry about that, you guys. Okay. guys, I mean, if you guys could go look at it yourself. This is TradingView, which is so interesting to me how different site was doing different things. It's like presenting the data differently, right? And I just want to kind of see how different site do this. Why one site showed data this way. Perhaps it's just, again, how they kind of sample all the data to put into consideration. I don't know how, again, this accurate this website is versus this one. This is a TradingView. I just saw this and I'm like, oh, this is interesting. I've never seen the data being presented this way before, and that's why I wanted to do a live stream here. So just again, this is more in-depth kind of overview of what I already did it. Show you this is the dividend and all that stuff. Sorry. So I'm gonna be taking my dog out right here. So I will let you guys go, and thank you for watching, you guys. I appreciate you commenting. Sorry I didn't even look into what you're commenting, but yeah, if you have a chance and if you love this company, go ahead and take a look at this website here, TradingView. Okay. Alright guys, I'll see you later. Bye.